Market update. Okay, so generally this time of the year, we have quiet markets. Generally, traders start thinking about the end of the year, Christmas and holidays. But markets at the moment are not quiet. We actually have a lot going on and a couple of risk events coming up as well to navigate. So firstly, we got a surprise from China on Monday. So Monday afternoon, China announced, we had headlines that they are planning some more monetary stimulus, so loosening monetary policy further, and also some fiscal stimulus. The reason why they're doing this is quite obvious, is that in about a month's time, Trump will take office, and China expects some very big tariffs, about 60%, and to be in a trade war with the US. So what China's doing is trying to stimulate their economy, because obviously their economy is not doing so well at the moment. The last thing they need is a trade war. So these policies are designed, literally, is to prepare their economy for Trump to take power. Now, the direct result from those headlines, we did see a broad-based risk bid, anything positive coming out of China, because China is so important for the global economy, that risk rallied. So we saw commodities rally. We also saw the Aussie dollar rally. It went up about a cent on the back of those headlines, and we also saw obviously equities, especially Hang Seng, Chinese equities, rally initially. Now since then we haven't seen like a further rally on top of that, but one of the key takeaways is that it looks as if China has put a floor underneath their markets for the time being, and so traders are generally starting to look positively on China and not chasing it, but certainly looking to buy the dip in China, and they are looking at preparing for to get the details for exactly what this monetary and fiscal stimulus is going to look like, and no doubt we'll probably see more positive gains when that happens. The other main thing that came out of China, which was big news, was that after 6 months of not buying gold, China has resumed buying gold. So the gold bulls loved hearing that, and we've seen a very good rally in gold this week. Gold had been range trading for the last couple of weeks, not really going anywhere, and it was sort of weighed down by the stronger US dollar, but it has shaken off that at the moment, and we've seen a very good rally, almost back up to 2,700. Not sure if I'd be chasing gold fresh long at these levels, but certainly the sentiment to gold again now, with China buying has turned positive. So potentially buying the dip of gold at the moment probably looks like the preferred strategy. Okay, so yesterday we did have also an RBA meeting. RBA did not cut rates, that was expected, but we did get some, I suppose it was, the best way to describe it was a dovish hold, where the language has changed. So the RBA certainly is open to cutting rates now, but it is data dependent, so it's going to need potentially unemployment to go up, and obviously they're going to need CPI to go down. But having said that, the market is starting to price in February. That's the first RBA meeting of the new year. There's no meeting in January. So the rates market is priced in about a 60% chance of a 25 basis points in the start of an easing cycle in February. Now tomorrow is important for the local market, the Aussie market, because we do have employment data. Market is expecting unemployment to go from 4.1% to 4.2%, and headline employment to gain by 25,000 jobs. So that will obviously be important for traders pricing in that rate cut in February. A strong employment report, well, they'll start pricing out February, whereas a weaker employment report, yes, they'll start pricing in maybe even more than a 60% chance of that rate cut. Look, regardless, that dovish RBA language yesterday did smash the Aussie dollar back lower post that Chinese stimulus rally. We are back below 64 cents. So look, the Aussie dollar at the moment certainly is one of the ugly ducklings in the currency space, and is certainly struggling. And at the moment, I would imagine that we're probably trading a 63.5 cent to maybe 64.5 cent range with buy sell topside rallies. Okay, today we've got some very important data out to the US. It is probably the biggest and the last risk event that we have this year, and that is the US CPI data. Now, look, last month, US CPI in November, actually, headline CPI went up from 2.4% to 2.6%, and we had core CPI stay sticky at 3.3%. This month, the market is looking or expecting that the headline CPI year on year goes from 2.6 marginally up to 2.7, but core CPI remains at that 3.3% level. Now, we do have a Fed meeting on the 18th of December, right before Christmas. Now, the market has pretty much priced in almost 100% that the Fed will cut rates by 25 basis points at this meeting. So, look, the CPI number will be important in that if it does come out well above expectations, so I would suggest it would need maybe a headline to be 2.8% or higher, and a core maybe going up towards maybe 3.5%. Then traders will have to reprice that rate cut in December and start rethinking whether or not it is a done deal. That scenario is probably the one where we will get the most volatility in markets. Obviously, we'll see US bond yields sharply higher. We'll see an aggressive rally in the US dollar on the back of that. And no doubt equities, which have been doing exceptionally well, which have been one of the standout markets in 2024, and trading up near record highs, S&P, NASDAQ, we'll potentially see a decent retracement and sell off there. So again, this scenario is on a number that comes out above expectations. Look, if it comes out on expectations or slightly below expectations, markets will absolutely cheer that number. Markets are already looking forward to the Santa Claus rally, which seasonally always puts on average 1% on top of equity gains. So any number that comes out below expectations, around expectations, no doubt equity markets are going to continue to cheer and take those equity markets higher, and no doubt that will dictate how we trade into the end of the year, and obviously we're going to trade very bullish. So yes, this number is going to dictate literally how the market probably will trade into the end of the year. So very important to watch this number tonight. But after the number, the Bank of Canada actually meets, and Bank of Canada will be cutting rates. They are priced in to cut rates from 3.75% down to 3.25% by 50 basis points. Look, markets, obviously it is priced in, but markets do love and cheer rate cuts. So post the CPI number, markets will have something to cheer about. Anyway, that does us for what to expect tonight. So look, good luck with your trading with that, and we will check back in with you shortly.